Welcome to Markets Now. I'm Michelle Rook along with Darren Frye with Water Street Solutions. Friday's closes were mostly lower at the exception of cotton and cattle. And Darren, let's talk about the grain trade. It looked like favorable weather kind of pushed us on Friday down.
Yeah, it absolutely did. We had a lot of the models at noon went wetter here on Friday, and obviously the grain trade closed on its lows across the board. You did have wheat closing a little higher for the week, but certainly beans underneath where they did last week from the June 30th stocks and acreage report. So that's a little concerning when you see a market that was so bullish last Friday close under where it did after getting that type of news. Corn trying to make a bottom here for a dead cat bounce, but having trouble and struggling today with wetter weather forecasted for the weekend in the early part of next week.
All right, so I want to talk about November beans first of all, because part of the pullback here was the failure technically when we couldn't take out the highs and the $14 mark, right?
Yeah, we just got over the old high at 13.78, but we didn't climb above $14. We had a nice pullback that turned into a lot more of a severe pullback. And really, this 13.10 to 13 and a quarter area needs to hold, or we're looking at something else on the charts for sure. And I think it will try to hold just given these acreage numbers and how tight the balance sheet is. But hey, the market action wasn't great this week, and we got to see if we hold as we start a new week of trading on Monday.
Yeah. What do you make of that, though, when you get 4 million less acres and you can't go above that resistance area? What is the market telling us?
Well, the market might be thinking that we're going to find some acres. We know there was a little over 8 million that hadn't been planted. There's concern over how many double crop acres we'll get as well. We could have a lot with the moisture in a lot of these areas, but we got to get the wheat out first. And the wheat harvests have been somewhat slow, and it's because of all the wet weather. And so as a result of that, we're not sure about the acres, but I think the trade is saying, hey, I bet we get some added acres in soybeans when NAS resurveys. And we know they're going to do some resurveying. They said that it's probably in order, and we wouldn't know anything until September at the earliest, maybe October at the latest.
So, Darren, as we march into the WASDE on Wednesday, soybeans in particular, like I said, you take over 200 million bushels off the ending stocks with that lower acreage figure. Does it show up? And does yield also come into play? Does USDA have any adjustments there?
You know, they might. I don't know what they're going to do for sure on soybeans. I do expect them to lower the corn, but on soybeans, because they are more of an indeterminate plant, they can bloom and pollinate and set pods, fill those pods at later stages, and they do that several times during the growing season. They might not lower the yield from 52. That's what they have currently, and that's what they're working with. But I think the average trade guess is probably in that 51.5 range. And so people are expecting them to probably dial that back. And that'd be largely looking at crop conditions. We saw crop conditions last week not improve in soybeans, actually go down 1%. I don't think that'll be the case this next Monday, but I think that's maybe the fodder for why they'll pull these yields back a little bit in the July WASDE.
Will they pull back yield on corn? 67% of the corn acres are in some level of drought, but is it too early to make an adjustment?
Well, the July time frame is not like what they've done in some years that have been unprecedented, like they've made some switches in June, right? And they don't like to do that June switch because it's really too early. But July, they could pull this back. 181.5 is the trend line. I don't think that we're talking that anymore with some of the severe issues that dry land Nebraska, parts of Missouri have had. We'll have some abandoned acres before it's all said and done. And so I could see them pulling the corn yield back maybe to 177, which is kind of our highest ever yield. And that's where they leave it until they have more information in August and September.
But how much of a cut in yield do you have to offset the higher acreage, the 2 million extra acres we found?
Well, if you take a look at the extra acres, if you cut the yield 4 bushel, you're going to take out about that amount of yield because 2 million times 180 is, 360. You cut 4 bushel off of 80 million acres, it's about 320. So that's going to be kind of a wash. And then we got to cut exports. So we'll end up with more ending stocks probably than what we had, but that will be a nice offset for those acres that we found on that June 30th report.
So December corn closing just below that $5 mark here on Friday. Are we fairly priced with what we know about how big inning stocks could end up being?
Well, I think if any stocks push higher because grain fill is good, we have more downside in corn. I wouldn't be surprised to see a fall low closer to 450. I think we've probably ruled out the 375, $4 area just because we're not going to have a yield pushing the 180 mark. We're going to have a yield probably a little smaller than that. But I think the trade right now is probably trading, somewhere in this 175 area. And hey, if we have poor weather conditions later that affect grain fill, obviously we'll pull that yield back more, but it's way too early to go, I think, below 175, 177 area for now.
Wheat market was down on Friday, but up for the week. So is that market starting to turn the corner to be more of a leader than a follower? And we are putting what weather premium in, you think?
I think it is becoming the leader, and I think that there's a lot of dynamics there with maybe the spring wheat was a surprise to people on this last report when crop conditions were off 4% from what the trade expected. I do think you have a lot more consumer buying interest from the world wheat consumer. We're seeing that as they're coming a little bit more aggressive, like in the Black Sea area. We know Canada's dry. That's what led to an oats rally. A lot of people are like oats knows, right? But oats are going up because Canada has some dry weather and maybe more dry weather coming. And then we know that El Nino is always unfavorable typically for Australian wheat production. So you combine all those things, you probably are trying to make a bottom here short term at least. And we have a rally in front of us led by the Minneapolis contract. And then next, the Kansas City, Chicago will be the dog with fleas that kind of comes later.
Yeah, that's what we've seen that spread trade kind of unwind there as well. Okay, so let's talk about the cotton market. December cotton higher on Friday, but we've been pretty sideways here with kind of a tug of war between supply and demand fundamentals. Where do you see us or what breaks us out of that range?
I think better weather, better size crop, more production could take us lower. But right now it is a sideways trade. Goes down for a while. You think it's going to give way support levels, and then boom, it bounces right back up to resistance levels. So that market is non-directional right now, just chopping people up. But I do think the seasonals are for down, and we will see some pressure on that market as we enter further into July and into August and come nearer to harvest.
You bet. Cattle market ended higher on Friday, up towards its session highs. It's been really sensitive to what the corn market's been doing, but what do you see in the future here? Where are we going to go with that market?
Well, the cash trade is still fairly strong. We got lighter weights, lighter numbers, but it's starting to maybe sputter a little bit here. We know box beef will probably turn lower here over the next 3 to 4 weeks. We saw it close here yesterday a little bit lower here on both choice and select. I didn't see today's stuff. I haven't been through that information, but I wouldn't be surprised we can continue to see a weakening trend where choice gets back under 300 here by the end of the month. But we know with lighter numbers and lighter weights, and then with the wetter weather and feeder cattle probably not going to be placed as much with the grass being more plentiful, we know they'll stay somewhat supported. Technically, the market looked like it was primed to roll over earlier in the week, but man, cattle came back. They closed near the week's highs. Feeder cattle trying to make a move back too with corn under pressure today. So we'll have to see what early trade does next week, but this is a terminal wave. It will end at some point, but I don't think you can call a top yet in the cattle market.
No, not with this tight supply situation that we have. And boxes were down at noon, but it looked like we had pretty decent exports. So still pretty good demand, don't you think?
Oh yeah, still good. And really depends what the domestic consumer does. And right now, the economic numbers are still saying the consumer is doing pretty good in this country. And so, it's hard to call a top when they're still wanting to buy things.
Thanks so much, Darren Frye, Water Street Solutions. That's Markets Now.
Yeah.